Hello and welcome to BW Hotwires. Today we have with us Mr. Sandeep Gambhir, MD and CEO of ORIX India. Thank you so much, Mr. Gambhir, for speaking to BW Businessworld. It's an honor interacting with you always.
Thanks. The pleasure is all mine, Avishek.
Were you also involved in reinventing yourself post COVID? And what kind of impact did your industry have? And did it anyway impact your business?
So, from an ORIX standpoint, we are in the mobility business. Today, we are the largest shared mobility service provider in the country. By shared mobility, I mean we are in the car rental business. We are the largest corporate car rental company in India. We are the second largest employee transportation company in India. We are in the self-drive business. We do passenger car leasing, equipment leasing, commercial vehicle finance from a transportation segment standpoint, which this diversification into the various lines of businesses makes us the largest shared mobility service provider in India. Uh, as you rightly said, COVID has had its impact all across, and we're not any different from what the market has gone through. Having said that, the diversification of business lines is something that has helped us. In some part of our businesses, we've been impacted. Still, the recovery has not happened. In some other parts of our businesses, we are doing far better than what we were doing earlier. So, if I were to look at the transportation businesses, uh, the corporate transportation or the corporate car rental or the employee transportation, which is again catering to people going from work to office to home and back, or home to office and back, uh, those part of our businesses have been impacted. But if I were to look at the leasing part of our business, leasing, we are the largest leasing company in the country on the passenger car side. And in fact, we're doing more than what we were doing pre-COVID times. And that started after the first lockdown ended towards the middle of last year, which is July, August timeframe last year. And since then, we haven't actually looked back. Even the second wave, there was a marginal impact because the second wave, while it was very lethal, the time that the offices and the business activity was closed down was much shorter. So it was a short and lethal wave. Businesses have bounced back. So the impact of business was more in the first wave, slightly lesser in the second wave, and maybe we also aligned to the realities that how are things going to work. Obviously, when COVID happened, the first wave, people were grappling with various issues. I think, like most corporates, we've also aligned to new realities, new way of doing things. So the ability to cope up with the second wave was much better from an operational standpoint.
Is it safe to assume that subscription activities are accelerating and leasing activities are, decelerating? Is that the trend that you're witnessing? If yes, can you shed some light on that?
Yeah, so you're partially correct. The first part of the question is correct that yes, subscription is accelerating, but that is not at the cost of the traditional leasing business. In fact, we are seeing both growing. Obviously, subscription will go faster because it has a smaller base. Uh, Leasing, despite its very large base, it's an old concept, well settled in the marketplace. It continues to grow. Maybe we are growing faster than the market. Maybe we are growing better than the market, given the product range, the clients that we have, the financial capabilities that we have. That is helping us. But at no point of time are we seeing subscription eating into the leasing share. In fact, subscription is creating a market of its own. Uh, by definition, one would presume subscription is for people who are not keen to own a car. Yes, they want to drive a car, but they don't want the hassles of insurance, maintenance, or they don't want to take the risk of the residual value. It's for people who are not closed out on the decision for owning a car for 4 to 5 years. See, car buying is a capital intensive decision. Most people today, and traditionally that's what the car buying is. You buy a car for 4 to 5 years and then you change to a new car, but then during the tenure you take the services in your own hand. You get the car maintained on yourself, the insurance is done by you, and at the end of the lease, loan, or whatever, or at the time when you want to upgrade to the car, you will want to sell off the car on your own. Subscription is very different, wherein all of these are taken care by the subscription company. So in a way, I would say subscription comes in the 1 to 3 year tenor. Leasing would come in the 3 to 5 year tenor, similar to what a loan would be. And then obviously the cash down mode of payment where you just own the car as if, and if you have a lot of money upfront. So these are three different ways of buying a car. These are channels. The expectation is that subscription as a channel adds a new set of customers to the overall OEM population, to the overall OEM's business numbers. We're not using subscription as a tool to replicate subscription is a new concept. Its aim is to add a new set of
Okay.
customers who end up buying cars.
So, is it safe to assume that people are getting more SUVs subscribed than sedans and hatchbacks? Will it be fair to assume, or that would be like too premature to assume that?
On an overall segment, we are seeing SUVs taking a larger share of the overall car buying. But that's not true
Okay.
for subscription, because subscription as of now is being marketed by a limited set of manufacturers. Uh, so has tied up with us, we've tied up with Nissan, we've tied up with Volvo. And given the distribution of manufacturers that we've tied up with Maruti and Nissan, these are generally these smaller segment of cars. It is still in its early stages. Uh, so we are going at the mid-sized cars, the sub 10 lakh range largely as of now. And once the initiative is
Okay.
successful and more manufacturers come in, you will automatically see a shift towards the SUV segment as well.
You are present in multiple verticals, but there's one segment which is missing from the pie, and that's shared mobility. So, what are your thoughts on shared mobility? Will you be getting into that? And if yes, can you put a timeline for that? And do you see that as an opportunity or as a threat?
There are players who would be in the shared mobility space, offering. So the players like Ola and Uber, they are on the retail side of the shared mobility space. When I provide a vehicle which, let's say, drops a TCS employee in the morning, does a Wipro in the afternoon, and does an HP in the evening, essentially there are 12 different users using the same vehicle for meeting their transportation requirement. That's also shared mobility. So essentially, shared
Yeah.
mobility is using the same vehicle to cater to transportation needs of multiple people. Now, they could be under the Uber or Ola platform where the same vehicle is used by 5 different people during a day, or it could be a vehicle wherein 3 people drive together to office and then they get dropped, and the same vehicle goes to another office and does the same service with another set of people. And then in the evening, we are on that segment. So every player in the overall shared mobility space is doing what they have set out to do on their own. So the entire mobility space is a fairly large space. We are not catering to the retail space
Okay.
like the Ola and Uber. We are catering to the corporate space, and the space that we occupy makes us the largest in the entire shared mobility space. So if the same
Okay.
vehicle
Fine.
can get used
So,
across
so
self
what?
drive,
Yeah.
the same vehicle can get used across our self-drive business. If you understand the way the corporates work, well, the corporates are weekday heavy. So Monday to Friday, the vehicles get deployed at the corporates. Self-drive business traditionally used to be weekend heavy. It provides us the opportunity to use the same asset over self-drive over the weekend. So the asset is getting shared across multiple businesses to transport different set of customers, and that's the way we call ourselves a shared mobility player.
To put it very succinctly, you are not interested in taking on Ola and Uber. I mean, that's a vertical which you're not excited about, right? Is that what you're saying?
No, we're not eyeing that business at all.
Which among the many will be your major volumes driver in terms of bottom line and top line going forward, especially as the businesses have been as the rules have been rewritten post-COVID. So which one do you think will be the maximum, volumes generator?
Clearly, leasing and subscription are two things that we see taking a lot. They already form a very large share of our overall business volumes, and those are the two lines of businesses that I personally see taking an even larger share going forward. What we have seen post COVID is there is a very clear shift in terms of personal ownership of vehicle. People want sanitized vehicles for themselves. They want the vehicles to be at their disposal when they want it. So that is what is helping uh, more and more people shift towards car buying. We've seen the buying of cars increase over the last couple of months, and it was so initially we saw that momentum in July and August, and everybody thought there is pent up demand because we've been in lockdown for 4 months. So July and August, or maybe till September of last year as well, people thought there's pent up demand, but we continue to see increase in demand in the last quarter of the last calendar year and the first quarter of this calendar year. And even in the month of June, after the lockdown has opened, as well as July, we continue to see that demand being there. So there is a very clear shift in terms of people wanting to drive cars on their own that are owned by them. There is a definite shift from Ola and Uber uh, for people who can afford. So there are people who are buying second cars. Yes, in some cases they may be buying a smaller car, but we've not seen demand coming down. Personally, from a leasing standpoint, as I told at the beginning of the call itself, we are probably doing 125% of what we used to do pre-COVID, and I don't see the
Okay,
trend
okay,
changing.
okay.
I don't see the trend changing, and adding to that is the subscription coming in. And subscription again is allowing the
Okay,
flexibility to people to own cars for shorter tenures, 1 year, 1.5 year, 2 years, because that is what subscription is
okay,
packaged as. So those are the two segments
okay,
that I see are
okay,
changing. In fact, what we're also exploring with a lot of manufacturers, and it's something that will be a new concept to hit the market very soon, is the used car subscription, which is
okay.
not just buying newer cars on subscription. There could be ways and means to figure out how we can make the affordability of a used car through subscription even more attractive.
As your business is booming, you're not facing any hurdles. So, do you intend to expand your fleet size? If yes, can you tell us what would be the total count going forward, and where will it be deployed towards?
I won't say that we've not been impacted and business is booming. There is a lot of cautious optimism around the place. Some parts of our businesses are clearly growing. As I said, the transport businesses have been impacted. The leasing and subscription are clearly the two growth engines that we foresee for the next 2 to 3 years. And that is where most of our focus and fleet addition would go to. So if we have 16,000 vehicles, on an average, we are doing 6,000 new vehicles every year. I see no reason the 6,000 not going to 8 to 10,000 in the next 2 to 3 years on an incremental basis every year.
Thank you so much for talking to BW Business World. It was a privilege talking to you. We wish you all the best in your vision as well as your mission for the industry.
Thank you so much. Thanks for having me there. Nice talking to you.